What if I told you that two of the biggest economic powerhouses on the planet, Japan and China, just pulled billions out of U.S. bonds? This isn't just a routine financial move. It's a powerful statement, one that could shake the very foundation of global finance. For decades, the U.S. relied on these nations to fund its debt, keeping the dollar strong and its economy afloat. But now, that loyalty is fading, and the consequences could be massive. Why are they stepping away? What does this mean for the future of investment, currency stability, and economic alliances? And more importantly, how could this impact you? The answers might just change the way you see the world. Japan, once a cornerstone investor in U.S. Treasuries, has been steadily reducing its stake, signaling a strategic pivot in global finance. This isn't just a minor shuffle. It's a seismic shift that could alter investment flows worldwide. For decades, Japan's faith in U.S. debt was unshakable, a pillar of global economic stability. But now, the tides are turning. With geopolitical tensions rising and economic self-reliance becoming a priority, Japan is steering away from excessive reliance on Washington's financial framework. The implications? Higher U.S. borrowing costs, potential currency fluctuations, and a recalibration of global alliances. And Japan isn't alone in this move. Others are following suit. In a stunning turn of events, the U.S. government has blocked Japan's Nippon Steel from acquiring U.S. steel, citing national security concerns. But is this really about security, or just a high-stakes game of economic protectionism? Japan, a long-standing ally, saw this as an unjustified move. After all, business is business, right? Now, lawsuits are flying and tensions are rising, making one thing clear. Economic battles are no longer fought just in boardrooms, but in geopolitical arenas. The real question is, what happens next? And what does this say about investment trust between the two countries? This story is far from over, and trust me, you don't want to miss what's coming next. If you've made it this far, you're already ahead of 99% of people when it comes to understanding global finance. But this is just the beginning. There's so much happening behind the scenes that most will never hear about. Hit that like button, subscribe, and turn on notifications, because staying informed isn't just smart, it's a competitive advantage. Japan isn't the only one pulling back from U.S. Treasuries. China has been making similar moves, and on an even larger scale. A decade ago, China held a staggering $1.27 trillion in U.S. debt. Yet by late 2024, that number had dropped by nearly 40%. This isn't just a financial decision. It's a calculated shift in global power dynamics. As tensions between Washington and Beijing continue to escalate, China is diversifying its holdings, reducing reliance on the dollar, and strengthening its own currency. The message is clear. Economic independence is becoming just as crucial as military strength. And if both Japan and China are stepping away from U.S. debt, what does that mean for the global financial order? One thing is certain, Japan is taking notes. As Japan repositions itself in the global economic landscape, it's doubling down on regional alliances. With growing uncertainty surrounding U.S. economic policies, Japan is finding new opportunities closer to home. Recent high-level talks with China have focused on clean energy, healthcare, and conservation, areas where both nations stand to benefit. This shift is more than just economic pragmatism. It's a strategic play to reduce reliance on Washington while fostering stability in Asia. Stronger regional ties could mean more diversified investments, a more resilient currency, and greater economic autonomy. But here's the real question. Does this mark the beginning of a major geopolitical realignment? The answer might surprise you. If you've made it this far, you're clearly someone who seeks real insights into global finance and power dynamics. But this is just scratching the surface. Hit the like button, subscribe, and turn on notifications, because the forces shaping the world's economy are moving fast, and you'll want to stay ahead of them. For years, Japan's decision to release treated radioactive water from Fukushima stirred controversy, with China imposing a strict seafood ban in response. But now, a potential breakthrough. Both nations have agreed to independent testing under the International Atomic Energy Agency. This diplomatic move could ease tensions and reopen trade channels, but the real impact goes far beyond seafood. It's a test of trust, a signal of whether economic cooperation can override political disputes. If Japan and China can navigate this delicate situation, it might set the stage for broader financial and diplomatic collaboration. But with deep-rooted distrust still lingering, is this really a resolution or just a temporary ceasefire? Japan's retreat from U.S. Treasuries didn't happen overnight. It was a calculated, years-long shift. Back in early 2020, Japan held nearly $1.29 trillion in U.S. debt. But by late 2024, that figure had dropped below $1.98 trillion. The strategy is clear. Prioritize domestic stability, strengthen the yen, and focus on local bonds. This isn't just about numbers. It's about control. By reducing exposure to U.S. economic fluctuations, Japan is safeguarding itself against volatility in Washington's fiscal policies. But as Japan reconfigures its financial playbook, one must ask, how will the U.S. respond to losing one of its most reliable creditors? Soaring interest rates in the U.S. didn't just shake domestic markets. They sent ripples across the global financial system. For Japan, the rising cost of hedging currency risks made holding U.S. Treasuries a far less appealing option. What was once a go-to investment turned into an expensive gamble, forcing Japanese institutions to look elsewhere. With Washington prioritizing inflation control over bond attractiveness, Japan had little incentive to keep funding U.S. debt at a loss. The bigger question now is, if one of the largest holders of U.S. bonds is pulling back, how long before others follow suit? Few moments in financial history compare to what happened in April 2024. In a bold and unprecedented decision, Japan executed its largest ever single-day currency intervention, dumping U.S. Treasuries to prop up the weakening yen. This wasn't just a routine market adjustment. It was a clear statement. Japan refused to sit idly by as its currency lost strength, directly challenging the forces that had been eroding its economic stability. The move sent shockwaves through global markets, proving that Japan is willing to take aggressive steps to protect its financial sovereignty. But interventions like this don't come without consequences, and Washington was surely watching. The real question is, what comes next? Relying too heavily on a single economic partner is a risk Japan is no longer willing to take. Instead of keeping the bulk of its investments tied to U.S. Treasuries, Japan is spreading its capital across Europe and Asia, seeking greater financial independence. This isn't just about risk management. It's about future-proofing the economy against unpredictable U.S. monetary policies. By redirecting funds into alternative markets, Japan is securing a more resilient investment portfolio, one less vulnerable to Washington's decisions. The shift signals a deeper transformation in global finance, where economic giants are choosing flexibility over dependency. And with Japan leading the way, who's next to follow? If you're finding these insights eye-opening, imagine what else is happening behind closed doors. Most people have no idea how these global moves shape their financial future, but you do. Stay ahead of the curve. Hit that like button, subscribe, and turn on notifications so you never miss another deep dive into the real forces shaping our world. Tensions between China and Japan have shaped East Asian geopolitics for decades, but something unexpected is happening. Recent high-level meetings between the two nations have resulted in new trade agreements, expanded cultural exchanges, and deeper economic cooperation. This isn't just about diplomacy, it's a strategic recalibration. As Japan reduces its dependence on the U.S., strengthening regional alliances becomes a logical next step. Meanwhile, China sees an opportunity to solidify its influence in Asia, creating an economic network that doesn't revolve around Washington. But in a world where alliances shift like tectonic plates, is this the start of lasting cooperation or just a temporary truce? Trade tensions between the U.S. and Japan just hit a new level. When Washington blocked Nippon Steel's $15 billion acquisition of U.S. steel, citing national security, Japan saw it as blatant economic protectionism. Lawsuits were filed, diplomatic protests followed, and what was once a straightforward business deal turned into a geopolitical showdown. This isn't the first time Japan has faced trade barriers from the U.S., but the stakes are higher than ever. With Japan diversifying its investments and strengthening regional alliances, this dispute could push it even further from Washington's economic orbit. The bigger question is, how far will Japan go to secure its own financial autonomy? You now understand what most people don't. Japan and China pulling out of U.S. bonds isn't just a financial headline. It's a seismic shift in global power. These moves aren't random. They're part of a deeper strategy that could redefine investment flows, currency stability, and geopolitical alliances for years to come. But here's the real question. If the world's biggest economies are making bold financial moves, what should you be paying attention to? Those who understand these shifts gain an edge. Those who don't, they're left playing catch-up. Now, here's the deal. This is just one piece of a much bigger puzzle. There are countless hidden financial strategies, political maneuvers, and market plays happening right now that most people will never hear about. But you don't have to be like most people. Subscribe now, turn on notifications, and stay ahead of the curve, because understanding these shifts isn't just smart, it's a competitive advantage.